Alright guys, this is my top down analysis on gold. Now looking at the gold market, okay, let me rotate my screen for a better view of the okay. Now looking at the gold market, I can see that gold has been on an uptrend since last year. If we should go back to past market data since 2023, gold has been on an uptrend. You can see it. 2023, gold has been on an uptrend. Gold has been on an uptrend from the daily pass. Now, getting to this point, I noticed that there is a shift in structure from an uptrend to a downtrend. Now, how did I know that the market structure is shifting? Now we have the zone. Okay, no, we have this. Okay, we have this zone at the top. This is our highest point. This is our highest point that gold has reached. We take that point. Now, this is our lowest. This is the low. This is the low. Let me show you guys. This is the low. This is our lowest. This is our low. This low belongs to this high. That's why I mark at that low. Now, what we use and no change of structure. If market broke this low, it means that the market structure has shifted from an uptrend to a downtrend. And if you notice that market actually broke that zone and came back up. Now, the reason why market came back up is that market came back up to form what we call a double top. I marked out the zone. This is our double top region. Market came and formed a double top. So this is our double top region. I mark out the region. We have the one top and the second top. So it's our double top. Market form a double top which push the price downward a little bit. Now, looking at this market, although I know that the market is changing structure from an uptrend to a downtrend, there are still some factors to consider. Now you can see this circle I mark. I want to understand price movement at that place. Now, if you look from the daily perspective, you want to understand what is going on there. So I have to switch over to the 4-hour time frame to see what is going on there. Now, on the 4-hour time frame, this is what I realized was happening there. Now, you can see this is a small downtrend. This is a small downtrend that is happening here. This is a small downtrend, and this low is what this low. Let me mark out the low. This low now. This low belongs to. This is the lowest point of this our downtrend. We can call that our current resistance. That's our current resistance, and this is our current support. This highest point. This is our current support. Now, how do we know what current resistance and current support? Now, current support is followed by a red candle and a green candle, because a red candle form a support while a green candle form a resistance. So current resistance is followed by a green candle and a red candle. Now, what I wanted to take into consideration before entering this market is a break of this current resistance. A break of this current resistance, and looking at market, you can see that market actually break that current resistance. Now let me just draw a trend line here so that you understand what is happening. Okay, let me connect this trend line from here. Although I don't like doing too much analysis. Now this is a trend line, and the trend line meets perfectly at that particular zone where market broke this previous high. So market has broken the trend line, broken the other high. So what is market heading to? So initially I was targeting this large boss at there, but I say, what if there is a supply zone located at this place? You see this place I marked? This, okay, you see this tiny boss I marked? I say, okay, what if there is a supply zone located in other time frame that I don't know about? So I switch over to the 1-hour time frame. Now in the 1-hour time frame, I actually realized that there is a supply zone. This is our supply zone. Now, how do we know supply zone? Supply zone is just like the place where smart money came in. You can see this large, big candle. It created an inefficiency, which is what we call gap. Now, how is the inefficiency formed? Let me show you guys how the inefficiency is being formed. Let me show you guys how the inefficiency look like. Now, you can see this candlestick. You can see the difference between this candle and this. Okay, this candle and this candle at this place. The candle where I pick that boss for. Okay, the candle at the back of that other one. You can see that the gap between this candle and this candle is much. So that's what we call inefficiency. That's our supply zone. It also happen with demand. They also have demand and supply zone. And it's the critical area where price can come, mitigate it, and continue coming downward for supply. While demand, price can come and mitigate our demand zone and keep on going upward. and that's for demand and supply. Although I will create a separate video where I will explain briefly concerning supply and demand. Now looking at the charts, this is the okay. This is the one I marked from the 4 hours perspective, and you can see how it is perfectly fitting in the 1 hour time frame. Now, remember after the break, we need a retouch before we can enter into the trade. Now we can see the break. Now price has actually retouched at this area. Let me mark out the area of the retouch where I'm talking about. Let me mark out the area of the retouch where I'm talking about. Now this is this is this is the retouch. This zone is the retouch. This zone is the retouch. Now you can't just enter because a red candle retouched this area. Remember, you're looking for buy, so you need a green candle to confirm this retouch before you enter into this trade. Now initially I was targeting, okay, let me show you how I was targeting this zone at the top, but I shifted the target to this little zone. Now it might be a little peep. The peep movement might not be much, but remember the market has already shifted, so targeting a huge peep is not that advisable until market break this zone. Then you can add more order once market break this supply zone. Now, to confirm, I was not thinking, okay, what if the confirmation we need is already on another time frame? Then I, from the 1 hour time frame, switch over to the 45 minutes time frame. There was no, let me zoom it so that you guys will see it very well. You see, there was no confirmation, no green candle. Now from the 45 minutes, I switch over to the 15 minutes. Now on the 15 minutes, this is where we have the confirmation we need. This is where we have the confirmation we need. Now, despite having the confirmation we need a break of current to resistance. Now, where is our current resistance? This, remember I say resistance is formed when a green candle is followed by a red candle. Now we have our current resistance. I marked that the high of our current resistance. Let me show you guys. Let me show. Okay, this is our high of our current resistance. So I'm expecting price to break this current resistance before I stop into this trade. Remember, this is our target. This is our first target before we target this one at the top. Before we target this one at the top, we first need to target here. So just wait for price. For now, gold market is closed, so you can just keep checking it. Once price break that our current resistance, you can stop into the trade for a buy order. Now you can still, if you decide to trade it on the, let's see what is happening on the, okay, let me use 5 for those that trade 5 minutes. 5 minutes, let's go. Okay, the 5 minute time frame. Okay, now the 5 minute time frame, for those that trade the 5 minute time frame, you already have the confirmation you need to storm into the trade, because our current resistance on this 5 minute time frame lies at us. This is our current resistance, a green follow. This is okay. This is our current resistance, a green candle followed by a red candle. This is our current resistance here. This place is our current resistance, and as you can see, market already broke, and I even marked that zone. You can see I marked our current resistance, and market has broken it already. Market has broken the current resistance. So those that are trading the 5 minute, they actually have the confirmation they need to storm into the trade, but the market is currently closed. That's why I prefer this high, so that no matter how the market open, I will have the time to storm into the trade at least once it break this zone. And you see where you'll be targeting. Even though you're targeting 10 pips, 10 pips is something when it comes to forex trading, because most people can over afford, most people are looking for 2 pips and they are not seeing. But if you can see 10, 20, 50 pips, just be grateful. That's what God has given to you. Appreciate that and take it. For those trading on 1 minute, let me see what I can get from the 1 minute. Just doing an analysis on gold. Okay, on the 1 minute, we also have the confirmation we need on the 1 minute. You can see the market has shifted. The market was coming down and it has shifted. The market has started to go up. We have this break of current resistance. These are current resistance. This green kind of followed by red. Price has broken it. So those that are on 1 minute, they can storm into the trade. But I'm waiting for the gold market to open before I storm into this trade. And once the market open, I'll see what the market will do. If the market will know. Once the market open, don't just storm into the trade. Watch if the market will. Let me show you the zone that you need to watch out for. If market should break that